Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on call debit spreads. If you're not familiar with options, make sure that you head over to our website at bullishbears.com and take our options course. The link will also be below. So again, you'll hear me say it over and over again in lots of my videos. There are lots of different moving parts to trading options. But once you know all of those different moving parts and the components and how they work, then you start bringing them together into bigger strategies. And debit spreads are a very popular strategy. So there's credit spreads and then there's debit spreads, which fall under the umbrella of vertical spreads. Now they're very, very popular strategies depending on what type of trading bias that you have. Again, there's positives and negatives to both. This video is going to be specifically on call debit spreads. And again, in our course, we break down everything, with call debit spreads, credit spreads in general, debit spreads, all that good stuff, iron condors. So let's talk about call debit spreads. So again, another thing you'll hear me say in lots of other videos is that there are several different names for essentially the same thing when trading these spreads. So you'll notice as you go along, you'll hear some people call, let's say with debit spreads, you might hear someone call it a call debit spread, but then somebody else call it a bull call spread. And you'd be like, what the heck? Why is it a bull call? Which one is it? Is it a bull call spread? Or is it a call debit spread? And the answer is yes, it's the same exact thing. You'll also hear other people call a long call vertical. So a long call vertical, a bull call spread, and a call debit spread are essentially, they're all the same thing, just called three different names, which is just makes it confusing, right? So I say those three terminologies and I stress it, and you'll hear in several of my other videos, because I want you to know the names of the strategies all together, so that if you hear someone else call it a bull call spread and you're familiar with a call debit spread, you'll understand it as the same thing. So debit spreads, again, they fall under the umbrella of vertical spreads. And in Thinkorswim, you're going to see that the position shows vertical and it's a call debit. You will not see it shown as a bull call. I'm going to show you that in a second. But when you're doing a debit spread, you become a buyer. So you're essentially paying a premium or a debit. So think about if you go to use your debit card, money is coming out of your account. So you're paying, you're becoming a buyer, hence the word debit. So let me show you real quick before I move forward what it looks like on an option chain. So let's take Home Depot for a second. If you go over to the trades tab over here, you'll see the left is on the call side, the right is the put side. So when you go to an options chain, if you just right click on any of the strikes, you'll see buy or sell. If you sell, you are doing a credit spread. If you buy, you're doing a debit spread. But you'll notice to the right, there's nothing that says credit or debit spread. So that's because credit and debit spreads fall under the umbrella of vertical spreads. So whether you're doing buying or selling, you'll notice nothing says credit or debit spread, right? So to do a debit spread, you can either right click and then buy vertical right here, and then you can create a debit spread, or you could, click on the ask, then hold the control key down and, sell the bid, right? So that you can do it that way as well. But I want to draw your attention down here to the order entry screen right here. And here's where you'll see vertical. So it's green, so that shows that you're a buyer. Red would show that you're a seller. So you'll see vertical spread over here, and it says call debit. So you don't see anything that shows bull call spread or long vertical, but you can just think about long meaning buy. So you're buy, so buyers are the same thing as going long, and then you can see vertical, but it still shows call debit spread on the order entry screen. But many people just think about it as the directional, which is a bull call. So some people find that easier to remember, but just know in the entry screen and when you're doing the order, it is a call debit spread. So let's talk more about debit spreads. You need a bigger move in the underlying stock. So if you're bullish and you're doing a call debit spread, so basically a call debit spread is a bullish play, you need a bigger move up in the underlying stock. Whereas with a credit spread, you just want a moderate move or the price can trade sideways. When you're doing a call debit spread, you need there to be more of a move up in the stock. Now, again, when you're buying a straight call, so if you're bullish on a stock and you buy a naked call, there's no protection and you need a really big move in the underlying stock up. So when you're traditionally just buying a call, you need a really big move up in the stock. When you're doing a call debit spread, it's a combination, which I'll show you, of buying a call and selling a call. You need less of a move up in the underlying stock, but you still need a bigger move up in the underlying stock than you would with a credit spread. So if you were doing a bull put or a put credit spread, you don't need as much of a move up in your directional in the direction of the stock. So like a put credit spread would be the inverse of a call debit spread. So you just need the move to move up like kind of slowly or trade sideways. Whereas with a call debit spread, again, you need a bigger move directionally. So this is where it becomes a little bit more risky because you have to choose the direction of the stock more, right? So again, credit spreads are less directional. You do get more of an even risk reward with a debit spread than you would with a credit spread. And that's because, with a credit spread, there's more risk and less reward. However, you do receive a higher probability of profit because when you're an option seller, the odds are more in your favor of success because most options expire worthless. So with a debit spread, there is less risk, there's more reward. However, there's a lower probability of profit because, again, the odds are more in your favor as a seller. So credit spreads, you'd have a higher chance of success. But that doesn't mean you don't do debit spreads. And again, there's other times and places to buy calls and puts as well. So again, there are several different strategies with trading options. You just have to know when is the time and the place to do each strategy. And we teach you that in our course. So make sure you take our course if you have more questions. So with trading naked options and buying further out of the money contracts, you're buying time. So if you're an options buyer and you're buying out of the money, time is not against you, and time otherwise known as theta in options. So you need a big move or a bigger move in the underlying stock in order to have the options contract going your way and profit if you're just directional and you're being a buyer of options. And when you're naked, every day that time passes, you're going to be in that trade. Now, debit spreads give you a little bit less exposure to time decay due to the short strike that you're buying, which I'll show you. So with debit spreads, you do lower your break-even point. So if you're just buying, a straight call by itself, you need, a really bigger move for the stock a big move for the stock to go in your favor. But when you're doing a debit spread, that combination of the call, buying a call and selling a call, it lowers your break-even point. So you don't need as much of a move, but you still need to be able to choose the direction. You get more of an even risk reward again with debit spreads than you would with credit spreads. You do cap your gains compared to buying a naked call, so you can make more money buying a call by itself. However, there's a lot more risk. If the trade goes against you with buying a call or buying a put, you can lose all of your money that you invested into the trade. Now, your real risk with a debit spread is the amount of the debit, and you want to make sure that you take profits along the way between 55 to 65%. Do not hold till expiration because then you will be assigned shares of the stock. if it's in the money. So, but again, don't let assignment scare you too much. Again, ideally you want to take profits along the way, but if you are assigned the stock, if you do not have money in your account to cover it, your broker will sell the shares for you. So don't like freak out too much if that happens. If you do have the money in their account, then you will be assigned and you'll have the shares sitting in there, which you can again go and just sell them out to the market and get rid of them. But you just never know. You just don't want to play around with it because anything can happen with the price of the stock. So ideally, we like to teach people, if you get into a credit spread and a debit spread, make sure you take profits around the 55 to 65% and close out your trade. Don't allow it to go to expiration unless you absolutely have to. So with a call debit spread, it is a bullish play. It is a directional play, and you're doing a combination of buying one call and then selling one call further above out of the money. And you ideally want both strikes to expire in the money. Again, theoretical. With a call debit spread, you want price to be above the short strike, which is the option that you sell. However, again, that's to gain max profit, you'd want both contracts to be in the money. However, again, you're going to sell early at around 55 to 65% of profit. Don't hold until expiration because then you'll be assigned shares of a stock. Again, not super scary, but it's just don't do it unless you have to, right? Now, a popular way to buy a call debit spread is to buy one in the money and then sell one out of the money. The one that you buy has intrinsic value, and the one that you sell has extrinsic value, which is time value. And you want to buy the strike that you think that price will stay above. And the one that you sell, the sell strike, lowers your entry price and break even point. Again, I'm going to show you this order entry screen in the moment and how to put this all together. So at expiration with a call debit, you want price to be above the short strike, or basically have both options expire in the money. So it's a directional play. You want it to go above even the one that you sell. But again, you're going to take profits early around 55 to 65%. Another popular way is to buy one at the money or out of the money strike and sell one out of the money. You do get less risk and more reward. However, there's a lot less probability of success because you need a bigger move in the stock price to break even or profit. You have a lot more exposure to time decay, otherwise known as theta, and you need the stock to move more in your favor. So with a call debit spread, otherwise known as a long call vertical in bull call spread, you profit again as long as price stays above the break-even price of the debit, and you do receive max profit if price is sold above the short strike or the sold option at expiration. And again, I'll say it over and over again, you want to sell at 55 to 65% and don't hold until expiration. So let's take a look at an example, real world. This is where it's a little bit tough to find some bull call plays right now because the market, just to kind of show you here with some technicals, you'll see futures, they're kind of in this rising pattern here. You can see it's right near angular support. So there's lots of indecision going on. So when you start seeing this, happening, this is where you it's going to be a lot more difficult to find a directional play because price is trading sideways at a very key support level. So this is where, taking a direction can be more of a challenge. So if you're trying to go bullish or bearish right now in the market, it could be tricky when it's trading sideways at angular support. So it's a little bit harder to take these directional plays, even more risky, right? If the market's just kind of like flying and kind of moving up in a direction, it's a little bit easier to find a directional play. But when it starts trading sideways and you have these sideways and indecision candles, it's more tricky. So again, that's why buying a straight call or a put or doing a debit spread can be more challenging when you don't have a clear direction. So that being said, I was having a very tricky time trying to find a call debit spread play because there's not really good potential setups for a directional move up. So the best I could kind of find right now is Home Depot. So you can kind of see Home Depot it's kind of, it is kind of moving directionally up a bit. You can see a possible cup and handle, but this one can teeter and go either way. You can see these candles trading sideways. But again, I can't find any good plays and good setups to show for the purpose of this video. So let's just say you believe Home Depot is going to continue to rise and it's going to break out of this, let's say, potential cup and handle pattern. So you believe it's potentially going to break out, right? So you could buy a straight call on this. Again, very risky, but many new traders do that because they think, oh, possible cup and handle, this will break out, but this could easily fail as well. So that's where, again, very risky. But now if you buy a call debit spread and you're buying some protection, you don't need as much of the move to break out. But again, still a little bit risky. But let's put this trade on and show you what it looks like. So at this point, we're going to go to the trade tab right up here. And then we're going to, again, we have in our course the videos on how to trade credit and debit spreads. But then we have next level training. So if you upgrade your membership, we do have videos on what strikes to buy and all the metrics to look for when you're placing these spread trades. So I'm not going to go into all the details here in this video, but for the sake of this video, we're going to buy the 185 strike. So we're just going to click on the 185 ask, which pulls up right down here. And then I'm going to hold down the control key, and then I'm going to sell the 195. Again, not the greatest of a setup, but again, I can't find much to show right now with the market. So you'll see down here, again, just a reminder, it is a vertical spread. It is a call debit spread underneath a vertical spread. You do not see anything that shows bull call. It says call debit, and that's what it's known. And that's what you're actually placing is a call debit spread. So let's pull up the order confirmation box and go through the metrics here. You'll see here you're buying a vertical spread. And right here, your max profit is $450, which is the width of the strike prices right here, which is $10, minus the amount of the debit. So if you take, 195 minus 185, that's $10. So you'll take $10 minus 5.52. So again, price changed a little bit. So your max profit would be about $450. Your max loss is the amount of the debit. So right down over here. So that's how you make your max loss is you basically lose the amount of the debit. And how you figure out the break even is you take the in the money call or the one that you're buying and you add the price of the debit on top of that. So just say 550 on top of 185. That equals the 190.50. So that's how you break down the max profit, loss, and break even prices. So now I'm going to switch over to my virtual account here and show you how to place this trade. Again, I wouldn't do this one in the real world. Don't love it, but I got to show you an example so you know how to do it, how you walk through from start to finish, how to buy and how to sell a debit spread, and why you would take the trade. Again, more risky. You'd want to make sure you're very about as sure as you possibly can be on the direction of the stock. So again, for this video, don't do what I'm doing here because I would not be very sure of this, but that's okay. We're just trying to show you so you understand how to put all of these trades together. We try to do this in all of our videos to show you, because again, repetition is the key. I'm myself more of a visual learner, so we believe most people are too when they're learning options, to see how you put everything together and how you get in and out of the trade. So you'll see right here again, as a reminder, it is a vertical spread. So it's a call debit spread underneath the umbrella of verticals. You would confirm and send, always double check your order. So let's just put it out right now. you'll see it's just not going to fill right away. It's also, again, in the real world, many times these contracts, they take a while to fill. Do not rush them. But for the sake of this video, I'm going to go and just kind of move the process along on this one because I just want to show you how to get in and out of the trade. So at this point, you can see it's a working order. If you wanted to go and make the process go through quicker, we are not huge proponents of market orders. But if you needed to get in and out of a stock or an option, you could always change it to market order. The only times we would do that potentially is with a really highly liquid stock, not a low float penny stock. So you can see here I can go and cancel replace order, change it from limit to market, confirm and send, put it through, and there you go, right? So now you will see right here, if I go to the monitor tab right here, you can see my position right here in Home Depot. So what all I have to do to close it out is come right over here, right click, create closing order, and we're going to sell the vertical. So we bought the vertical because we did a debit spread. We were buyers. Now we're going to sell it to get rid of it and close the position. So we're going to sell limit order. Again, just for this video, I'm just going to put it out to market real quick so you'll see it fill. Confirm and send, always confirm over here. Put it out here and you'll see it just sold right here. So now when I go back into my position and I open it up, you'll see nothing is there. And that's how simple it is to buy, and sell a call debit spread. So if you need more help with options, make sure you take our options course on our website. The link will be below, or you can head over to bullishbears.com. And we greatly appreciate it if you like this video. Feel free to like it, share it, and subscribe to our YouTube channel. And please post any questions or comments that you have below. So hopefully this video helped you, and we will see you in our community. Enjoy.